Welcome to Managing Asia. I'm Christine Tan. The scale of disruption in the financial sector is unprecedented. Today we look at two startups carving their own path in the fintech world. You don't hear of Synechron because it works mainly behind the scenes. It provides tech services, consultancy, and digital solutions like blockchain and AI to financial institutions. FinTech is now a $400 million player, boasting top 20 banks for clients. We spoke to co-founder Faisal Husain to find out what it takes to create a successful FinTech beyond just building codes and software.
There was a gap in the market for a high-end, nimble, business-focused technology firm that was catering to financial services firm. And that was the simple idea we started with. This has to come on TV, right?
Faisal, with two friends, started Synechron with just $8,000 in 2001, just when the tech bubble burst.
I think the saying that ignorance is bliss was actually true. I think in those days when all three of us were very young, we probably didn't appreciate the risk.
You were bold and reckless?
We were bold and reckless. Luckily, it worked out. All the internal
Synechron is no longer a startup, but the CEO remembers the difficult early climb up.
So, try us out, because in those days we were a startup, and it was very difficult to show a track record or to show a history or a corporate resume that we could leverage off. So it was really people give us work on trust and faith.
60% of his business today is in the US, but Faisal is upbeat about Asia. In 2016 alone, fintechs in Asia attracted more than $7 billion in investments.
I think there are many cases where Asia is leapfrogging perhaps the West, especially in emerging markets with fintech playing a major role in financial inclusions, in payments, in transfers, in micro-lending. I think Asia is probably leading in those areas. So I think there is a shift that is happening because of the fintech revolution.
Well, as a fintech company, it's all about getting your hands on the next cutting-edge technology. These days, you're spending a lot of your resources on something called blockchain technology. What is that about?
Yeah, blockchain has been an area of major investment by us, blockchain and artificial intelligence. Blockchain is a revolutionary new computing architecture that came into a picture when Bitcoin was released. So when people really studied Bitcoin, they saw that Bitcoin is built on a very unique and new computing architecture called blockchain. And when you study it more, you find that it could be applied in many different scenarios. And two parties to transact without needing a middleman, without needing a central trusted party.
So it does eliminate certain processes?
Yes, it does eliminate certain processes. It is very real time, meaning there is no lag. For example, if I were to transfer money to you today, it takes 1, 2, or 3 days for the money to actually get you through the whole SWIFT network.
Does it dramatically cut down the cost of doing business?
It does, because you don't need a lot of the manpower and a lot of the technology systems that are in place today to make sure that the transaction reliably goes through. So in that way, yes, it is real time, it takes much less number of people, and it is much more secure. So the trust you can have in a blockchain system is at a totally different level, because it is almost impossible to hack it because of the way it's built. So it is very revolutionary. It's still early days. I think there's a lot of experimentation going on. We are trying to play a leading role in that through our blockchain accelerator program. But I think just like, for example, cloud technologies took 10 years to get to where it is today, which is now mainstream, but 10 years ago there were many skeptics on cloud. I think blockchain will go through a similar wave. It is early, but in 10 years it will be everywhere.
But still, you know, there are a lot of skeptics out there who say security is going to be an issue, regulatory uncertainty is going to be an issue, not to mention getting the much needed talent to implement these blockchain projects.
Yeah. No, I think security and regulatory wise, I think blockchain provides many advantages than it takes time for that ecosystem to develop. We're trying to play a very important role in that by training and investing in this area ourselves. So I think it's just a matter of time. I think when you look at the technology, and not just me, but some of the most smartest people in the world are convinced that a lot of things will be built on blockchain in the future. But again, it takes time.
All these years you've remained self-funded.
Yes.
You stayed away from VC money, you stayed away from external shareholders. Is it all about having total control? Is that independence so important to you?
That has been a major factor. I'll be honest, when we started the business, we did fund it through the $8,000 that one of the co-founders was able to get through a home mortgage. He mortgaged his home to get that. We're still very thankful for him doing that. But over the in those days, because it was the dot-com bubble burst and it was 9/11 happened a few months after, it wasn't really the time to go out and raise funding. So we almost didn't have any option. We had to do it on our own and bootstrap it and grow on our own cash flows. And because we started the company that way, we just continued. And yes, whenever you take funding from outside parties, there is an element of losing control. All of that is based on how much money you raise and what are the terms you give. But so far, it's been primarily because we are able to grow the company on our own cash flows. Doesn't mean that we may not take funding in the future. Our vision is to be a multi-billion-dollar company, to be $4, $5, $10 billion down the road. And to get to that scale, at some point we will require funding. But so far, we've been managing it.
Well, let's talk more about that ambition, because in terms of revenue, you're a $400 million company now. You aim to be $1 billion by 2020. How will you get there?
Yes, that's our target. We put the target of being a billion-dollar firm by 2020 2 years ago. And to do that, we have to grow 25% year on year for, at that time, 6 years.
Where will that growth come from?
The growth will come from financial services, first of all. The growth will come from the US, Europe, and Asia. It will come from large financial institutions, but both on the sell side and the buy side. About 30% of the growth will come through acquisitions, 70% of the growth will come through organic growth, and it will be based around the combination of what we call the power of 3 strategy: digital, business consulting, and technology work.
Strong growth also comes with very strong competition. A lot of these big banks now are also investing in FinTech technology. You threaten?
I think we're not so much threatened by the banks. I think we have a very good model in partnering and helping the banks. A lot of the banks, don't have the talent that is required to do a lot of the FinTech work, especially around blockchain and artificial intelligence, or even if they have some, and banks, nothing against them, but generally are not good at being agile and not good at being nimble the way we are. So
you say with a smile on your face.
I mean that with all respect to our clients, but we have a great track record of being very nimble, very agile, very innovative, and again it goes to the lab model, and that is very visible in the work we're doing in blockchain and artificial intelligence.
So you're targeting $1 billion by 2020. Will 2020 also be the year you're looking to go public?
Maybe, maybe not. We think it's a great size for us to consider being a public company. That doesn't mean that we will go public, but it's a great milestone to be able to go public. When we started the company, and I've had a very strong belief that we don't want to go public and be a small cap company. We want to have put those early years of struggle behind us.
You want to go with a big bang?
We want to go with a big bang. We want the market to come to us rather than us chase the market. And at $1 billion, if we do get to that stage, which I'm confident, you have proven to the market that you have come all this far on your own, through your own hard work and your cash flows and your profits, and now you want to chart the next stage of the journey. And for that, you want to be a public company and raise funds. So hopefully, those questions won't come up.
Stay with us. More with FinTech entrepreneur.
On stage in 2017. Chatbots will be everywhere.
AI, artificial intelligence, will actually take away a lot of jobs. Do you think this disruption is something Asia, the world is ready for, or the banking sector itself is ready for? Managing Asia, we'll be right back.